All right, let's get a check on the oil market now. We see a lot of volatility in the oil market at this time. Let's bring in Oluwatomi Mayowa, Senior Analyst, Financial Derivatives Company. Great to have you. Good morning.
Good morning, Larry. Thank you so much for having me.
Good to have you. So oil prices seem to be rising again, at this point, but I guess that's good for oil benchmark and the budget there. Definitely we did cross below that.
Yes.
A little bit, but now we're on the rise again. That's good.
Yeah. I would say that currently it's quite difficult to predict. The global macroeconomic environment is actually quite difficult to predict now. Why am I saying this? Is because of the heightened geopolitical tension that we've seen. We've seen the Russia-Ukraine war, and now we're having the Israel-Hamas war. And we saw how what happened at the Red Sea, where containers were attacked, and that has diverted a lot of ships towards away from Israel. So there's a lot of uncertainty in the air, and also it's making it very difficult to actually predict what things will be. And we've even seen that has actually encouraged increased volatility in the market. However, we are seeing global institution predicting oil price. Goldman Sachs has actually cut down its forecast for 2024 to by about 12% to $81 per barrel from about $92 per barrel. And we're also seeing Morgan Stanley predict that oil price is likely to average about $85 per barrel in 2024. Also, Bank of America has said oil price would actually average about $90 per barrel in 2024. So if you look at all of this, you'd see that there's still that bullish sentiment of that oil prices are actually going to increase, or should I say, stay above $80 per barrel in 2024. And that's because primarily because there's an expectation of a rebound in China's economy, and the supply cuts we've seen from Russia and from Saudi Arabia. So that is still guiding the sentiments in the market. But bringing it to Nigeria, talking about, first of all, I'll dimension my what I want to say, that's the impact on Nigeria, looking at the impact on the revenue, the impact on deficits, and then the subsidies. First of all, I would say that Nigeria, the federal government has placed its budget, the benchmark for oil, at about $77 per barrel, and which, if you look at JP Morgan's estimate, Goldman Sachs estimate, and Morgan Stanley, it's quite above our budget estimate. But if you also look at our oil production, the benchmark for oil production, which it's about, they're expecting about 1.78 million barrel per dollars. And if you look at our oil production currently, I think we produced about 1.3 million barrel. In the last 3 quarters, we produced an average of about 1.3 million barrel per day. So if you compare that, and then looking at the OPEC quota of about 1.5 million barrel per day, you'll see that we might likely see that shortfall in revenue in 2024. And then if there's a shortfall, definitely the government would have to fund that shortfall by borrowing in the capital markets, which we know that will push up interest rates and could also lead to crowding out effects in the private sector. So that's one. And then we also, if oil prices are projected to stay at above $80 per barrel, it also has an impact on the subsidy in Nigeria, because everybody it's quite clear that there's a subsidy on fuel, even though the government has said there's no subsidy. But we know, because we have diesel price trade at about 1,050 naira per liter, and then fuel price is just 600. So there's that 400 naira gap, because diesel price is a proxy of where the price of fuel should actually be trading at.
Right.
So basically, so it raises concern about subsidy and what the revenue picture will look like in 2024 actually.
And definitely, if the prices stay above, the benchmark in the budget, hopefully the excess crude account can get some flows. But let's look at the our refining issues now. See, the Dangote refinery is set to receive a second cargo of crude oil tomorrow. What can we expect from this second delivery? Can I finally buy Dangote PMS at some point?
Well, I would say that the long-awaited Dangote refinery is actually close to its full operation. Looking at the first cargo of about 1 million barrel per day, 1 million barrel, and then receiving another. We are expecting a total sum of about 5 cargoes, which would be about 5 million barrels in total. So we are expecting that the refined products will actually come into markets by January, next year. And so what's going to be the impact of this? First of all, we are going to see an increase in the supply of refined petroleum, and that will reduce, because it's being produced in Nigeria. It's going to reduce the downtime in the supply of the products. So you are going to get it at a faster pace compared to when it's being brought in from Rotterdam and all of those things. So we are going to see that reduction also in transportation costs and logistic costs. So that would actually reduce the landing cost of this refined petroleum product. However, you're going to ask me that if this is going to happen, then are we going to see a reduction in the price of fuel, for example, or most of this refined product? Actually, we must understand that the transportation cost is just, is somewhat immaterial, in the total sum of the refined petroleum, refined products. It's somewhat immaterial. So you might just see probably 100 naira, reduction in the price. So
I'll take that definitely, Toby. At this point, I don't mind 100 naira reduction. Any reduction at this point,
so
I'll take it.
It's really not, it's really, because the where the point lies is the global, price of oil, because Dangote is going to be receiving this crude in, it's paying for it in dollars, actually, not in nairas. So it's the global price of oil still, to some extent, comes into play in terms of determining the costs. And so, definitely, if the global price of oil increase, that will actually affect the price of refined petroleum. So that's, I understand that, but to some extent, you'd have to look at the other, the other things that goes into the production of this refined petroleum.
Even though Nigeria is an oil producer.
I would also want to point out the fact that, which it's not been, quite significant. People have not really recognized this, that, the proximity of the refinery, which is, actually helps too, because, for example, now it's located in Ibejuleki, so it's sort of closer to, for example, Ijebu-Ode, to some towns, outside of Lagos. So those who have to, initially people have to go to Apapa, Tinkan, to take to fill their tanks, and so the road between Apapa, to Shagamu and all of that is sort of congested. But now it's going to reduce, because you can now take from that Lekki road down to Ijebu-Ode, so it's sort of faster. So it reduces the congestion on the road. Now that, although we still see some imports, we still see some tanker go to Apapa, but that will be less now, considering this coming into play.
All right, Tommy, before I let you go, very quickly now, it's the week before Christmas. What should we expect in the domestic food commodities market?
We're already seeing that price increase, definitely. A bag of rice that's the long grain, rose by 12% to about 67,000 naira per bag, and that is really, food inflation is already at about 32%. Came in November at about 32%, and like we should expect initially is that at this November, as at that time, we should see a sort of tapering in prices as a result of harvest period, but we didn't see that. And now that we are now going into the festive period, it's really going to also exacerbate price, because people will have to, demand, there'll be increase in demand as a result of the festive period, which is the Christmas period. So that has actually pushed up prices in the market. So, however, for the tomatoes, for the pepper, we're actually seeing that stability in the price, because there's been increased supply as a result of the harvest period of those products. But we know that onions still the price of onions remains elevated, and that's because of the increase in the global price of onions, which is incentivizing most people to smuggle out onions outside of the country, and then reducing the availability of that in Nigeria. Also, this is not the harvest period for onions, so that's why we're seeing the price increase, but that is significantly higher than what it was last year. So that incentive to smuggle it out is really, affecting the supply of onions and then also the price. So basically, prices are already increasing,
right.
And when we go deep down into the weekend, it's going to be much more higher.
All right, bottom line, prices still rising, going to stay elevated into Christmas. Thank you so much, Tomi Maiwa, Senior Analyst, Financial Derivatives Company. Thank you.
Thank you very much, Ladi, for having me.
All right.